Banks are being thought of as intermediaries, but it's not really what's happening. Banks,
what are they then?
the creators of the money supply.
So you're firmly of the view that banks create money out of thin air?
Yes, well, I produced the first empirical studies to prove that in the 5,000-year history of banking. Banks are thought of as deposit-taking institutions that lend money. The legal reality is banks don't take deposits and banks don't lend money. So what is a deposit? A deposit is not actually a deposit. It's not a bailment. It's not held in custody. At law, the word deposit is meaningless. The law courts and various judgments have made it very clear if you give your money to a bank, even though it's called a deposit, this money is simply a loan to the bank.
That's true. Yeah.
So there is no such thing as a deposit. You just loans to the bank.
And then.
So banks borrow from the public. Okay, so that much we've established. What about lending? Surely they're lending money. No, they don't. Banks don't lend money. Banks, again, at law, it's very clear, they're in the business of purchasing securities. That's it. So you say, okay, don't, confuse me with all that legalese.
No.
I want a loan. I want a loan.
Yep.
Fine. Here's the loan contract. Here's the offer letter, and you sign. At law, it's very clear. You have issued a security, namely a promissory note, and the bank is going to purchase that. That's what's happening.